What's up, everybody? This is Jimmy with Trading Decoded. It is August 26, 2025. And the market's been weird, not just today, but lately. Jerome Powell pumped up the market when he basically implied that he's going to cut rates in September, which was good. Leading up to that day, it was a little bit rough. We got some divergences between Qs and SPY, and ADD and Qs, and it hasn't been the easiest week or so to trade. In fact, some might argue this whole year has been a little bit interesting, a learning experience, if you will. Today was no different. Today was unique in a few things that we saw quickly. And then we had a taste of what happened on Friday, which was a complete drop in implied volatility, which makes your options contracts not move very much, even with sizable moves on the chart. Theta then starts to compound, and just things can go off the rails really, really quickly. And I mentioned this morning in my spinalysis that we, as day traders, need to get better at respecting and learning to spot things that we should be walking away from, instead of forcing ourselves to sit here watching a market we know is more likely to take our money than to make us money, and then sit there and justify a reason why we should torture ourselves in looking at a chart like that. Now, we're going to go over a couple of trade setups. I took 2 trades today. There were some people who didn't take any trades today, which was very easy to have happen. There were some people who lost some money today. Fortunately, the majority did not. But let's go ahead and talk about the trades that we found, what we were looking for, and why. So leading into the open, you will see that there is no call put scenario on my chart today. The reason for that is we were in a very tight range leading into the open. Even the 8:30 reports this morning, which were a nothing burger, didn't really push the market up or down. We were going into the open with very little direction or sense of direction as to which way it might go. With that said, I said to everybody, if we do put call and put lines on this chart, I would be more conservative, right? I would say, well, we'd like to be below the pink line, and we'd like to be above, 570.45, looking for the move to continue up to 570.77. The reason I don't put call put lines is because some people use those as incentives to get into their trade. And on some days, or most days, that's okay. That's what I do. But when there's nothing in pre-market that's giving me the feel goods or any indication as to which way we might go at open, I don't like to aggressively get into something, right? So normally I would say my call line is above 570, and we'd be looking for 570.34, the first target up. So that would have worked in either case. And then my put line would have been pre-market mid here, looking for pre-market low. But again, because there wasn't going to be much time to react, being in such a tight range between those lines, I didn't want to put them there, because when you get yourself in a situation where you have to make a decision in a split second, a lot of times we fumble and we make not the right decision, and then it can quickly turn into something you wish you didn't do. So today was one of the days that we played a little bit more cautiously. Now, when I tell you about the trade that most of us took today, some people bought calls right out of the gate. I did not. I didn't like the looks of this big old red wick on top, but ADD was printing green. SPY was holding its support here. Qs was holding its support here. As this candle started to grow, we got to and breached what would have been okay for me to justify calls. Now, the reason we weren't looking for the first orange line as an entry is because the second one was just too close to the first one. It's only a 10-cent move. So if that resistance fails, but the next one holds, you're going to get caught in a trade that doesn't work. And when it pulls back, a lot of times you can quickly turn into a hold and hoper. Okay. With that said, we did have confluence in the beginning. We had ADD pushing up. We had Qs pushing up. We had SPY pushing up. And so I got into this trade near the top of this candle. We moved right up to our next target, which was nice and comfortable. But then at 9:33, I said to everybody, I said, Q's made it to the target we were hoping to get to. I'm seeing wicks on the tops of these candles. We got wicks on the tops of SPY. I said, if ADD starts to print red or starts to wick, I would either tighten up my stop losses significantly or assume that this thing for this moment in time is going to pull back a little bit or turn around and go the other way. It doesn't matter. What we want to do is be ready for any potential weakness so that we could take our profits should we choose to. And I say this every day. You don't have to get out because we made it to a target. But what you should do is know that that target is a level of resistance, okay? When we're moving up, we know where resistances exist because, well, we drew the lines there an hour before the market opened. So any one of these lines can hold as resistance. So you need to know, hey, if I'm going to take it from here to here, and that's your trade plan, then get in here, get out there, okay? Now, the reason I stayed in this trade a little bit longer was because ADD was still going. But once we saw these wicks, I made note of this. I said it out loud. And if you were in my room, you heard me. So there's no denying that we captured the majority of this move before it turned into a pullback that you wish you wouldn't have held on to. Okay. I stopped myself out of this trade. With that said, it was only a 9.52% win or something like that. Wasn't a big win. And therefore, it didn't reach my daily goal. And so I was on the hunt for a second trade. In fact, that first one was a 9.85% win. Okay. We respected resistance here on the Qs. ADD did start to pull back. Now, this is the trade I wanted to share with you guys. It's in yellow. The reason it's in yellow is because this was the setup was perfect, but my feelings kept me out of the trade. Okay. And this is the best way I can try and show people that we have to trade the chart and not our heart. Now, I like puts. So for me to have gotten into calls this morning and for me to skip an opportunity that looked like it was going to pay as puts tells you that I wasn't feeling really confident about what was going on here. My feelings got in the way of this particular trade, and it ended up being an excellent trade. Okay. While we were pulling back here, ADD started to rotate to the upside while Qs was printing red. So at this point, we're thinking, well, are we going to put in a higher low here and then continue up? I had said right at this moment, it was right around 9:36. I said, guys, I wouldn't buy calls yet. I know ADD is starting to print green. This was 9:37, sorry. But neither one of these charts are on support yet. The Q support is right here, and SPY support is right here, okay? It's where the opening candle held. It's where this guy is here. It's where this guy is here. And if we pull back to those levels of support and ADD is printing green, then we're looking for us to go right back up to the resistance we just came from. So even though I saw the trade, what made me feel like I couldn't buy those calls, which in hindsight, I wish I would have, is the fact that we had 1, 2, 3, 4, 5 red candles in a row. It was a pretty aggressive move down, and I couldn't get myself comfortable with the idea that that support was going to hold. And I missed out on a great opportunity. So in this case, this trade worked out perfectly. A lot of us didn't take it because of our feelings. And that's the thing I wanted to share with you in that particular trade. Did not take it. We talked about it. We saw it. Some folks took it. I was not one of those folks, and I left a nice sizable move and chunk of money on the table as a result. However, we hit up top here. We were in a range on both charts by this time, right? So we hit resistance here again on SPY. Qs up near a resistance area here as well. And we start to come back down. Now, for the people who held on to those calls, your stopping point, if you didn't take profits at this resistance, was when we closed back below that same resistance. That's your stopping point, okay? Then we started to move down. And as we started to move down, I had reminded everybody, I said, guys, remember, I said, if we were all the way up here, this was before pre-market, and we were coming down, I'd be interested in a pre-market mid break, hoping to get down to pre-market low. So this is the second trade that I took. As we were moving down, ADD was still printing green, but I guess my feel goods for wanting to play puts was there. A lot of people jumped into this trade even before I did, but we did break support that was pre-market midline. Okay, if you waited for a candle close, you still had a little room to get down to the next line, as luck would have it. As we were in this trade, ADD also started to print red, which kept us holding on to the trade a little bit more. We got to and through the pink line, and then the next line down becomes your target. We didn't quite make it there. And as we pulled back, ADD was still printing red. So I wait for candle closes. Now, this is something I want you guys to realize, because a lot of people, I think I said realize, there's a lot of people in my community who didn't know this until I reiterated it again Thursday. But what I do when I'm in my trades is, if I'm in a winning trade and we close below a line of support and I look at ADD and it's still moving in the direction that I'm playing, puts in this case, I'm willing to give it a chance to continue down to the next support. Now, if we fall short of that target and we start to pull back, okay, one of two things happens. Either ADD is still printing in my direction, which would be red, and then if that's the case, I wait for a candle close on the Qs before I stop myself out. If, however, we pull back on the Qs and I look over and the Qs and ADD's printing green, I wait for a breach, okay? Because I'm assuming that the momentum of the rest of the market is already shifting, and I'm not going to trust this resistance to hold. So in this case, I did give up a little bit of extra profit, hoping that the resistance was going to hold because ADD was still moving down. It did not. It stopped above the red line, which was our stopping point, and then it continued up. So yes, I left probably another 10% profit in that trade there, but this one came with a spike of volatility as well. This one ended up being a 54.17% return, which made for a decent trade. So a lot of people use that as their one and done. A lot of people took that as their second trade and made them green enough for the day. And a lot of people skipped the trade altogether, which is fine. And the reason they did is because ADD was aggressively pushing up. If you don't know, I tend to lean on the Qs more than ADD. ADD becomes a secondary factor for me to either be more aggressive getting into a trade or continuing to hold on to a trade that I'm already in. ADD very, very rarely plays a role in my entry for a trade if the Qs is breaking structure, okay? Because I do believe that if ADD and the Qs were fighting against each other, ultimately, SPY will lean more towards the direction of the Qs. We all should be waiting, myself included, for confluence between ADD and the Qs, but sometimes we get a little more aggressive, our feelings get involved, emotions run high, and we get a little aggressive. I know I'm not the only one that has that issue. How many times have you bought puts at the bottom of a big red candle run down? That's your emotions. It's not the right time to do it. You know that. I know that. But in this case, we were breaking support. We were looking for a very specific level. It gave us a little bit more than what we were looking for. So we got stopped out of the trade. After that, we were nearing 10 o'clock. We don't like to trade during a 10 o'clock candle. However, we recognized that we put in a higher low here. We waited for the 10 o'clock candle to print. It ended up staying up here. And I said, guys, you know how this usually works out. This normally turns into a break of resistance and a continuation up. Now, I'm not saying that because I want to take another trade. I'm done for the day at this point. However, it's a stark reminder as to why you should stop wanting puts off of higher lows. It would have cost you money. If it didn't cost you money, it would have given you an ulcer. Okay? Higher lows are bad for puts, especially when ADD is trending up. Now, we did have some people jump into calls here, and the fact of the matter is this higher low has to maintain its level of support. That's all higher lows are. And as long as it does, we're expecting to break resistance and continue up to the next resistance. Ultimately, after some sideways chop and uncomfortable feelies, it happened. And it turned into a nice trade. But you have to be, so the point, guys, is that I'm trying to teach you not only how to find trades that you should be looking to consider as high probability trades, but use that same rule as a reason to consider skipping a trade you thought you might want to take, right? If you're considering puts when we're putting in higher lows, I would say maybe at least wait for a break of that higher low to the downside, or maybe wait for a lower high to be put in so that you know that the sellers are trying to step up and they're becoming potentially stronger than the buyers. Higher lows means the buyers are getting stronger, not weaker. Does it mean every time that we put in a higher low, it's going to continue up? Of course not. But if you use that as a rule of thumb to justify whether you should be buying calls or puts, or to keep you out of puts, it will help you. And that's all that I make these videos for. That's the only reason my Discord exists. I'm trying to teach you how to spot better trade setups and how to skip the ones that are more likely to go against you instead of for you. It's price action. It's not call outs. It's not, biases. You can have a put bias, but if we're putting in higher lows, wait for the chart to stop putting in higher lows. Wait for it to break that support. Wait for ADD to be going down while it breaks that support. You're increasing your odds of winning exponentially by doing so. Okay? Now, even though this move went up, we had an alert up there. We got to it shortly thereafter, but contracts weren't moving very much at all. It turned into a grindy mess after that. You're probably wondering, well, what this green line is here. Well, this green box was a put trade that we were going to be looking for. And I told everybody, guys, I know you think, we want to play puts, and this is not the time to play because this was ass in a bag all the way down. I said, but if we can get through the top of this green box, I'd be targeting the bottom of the green box as a trade. And, it didn't happen because I was off the mic by the time, we got anywhere near that level. But that was it. Now we're kind of moving sideways until the end of the day here. We had a nice quick move up. I don't know if contracts are moving at this point because, I try not to pick up my phone or tempt myself with trading. I don't like to trade. In fact, I don't trade without the community. And quite frankly, I go pick up my kids and I start to do chores and things like that around the house after 12 o'clock. So that's all I got for you today. Sorry I didn't make a video yesterday or Friday. Friday I meant to, but got sidetracked and had to do some things that I wasn't expecting to do and had the thumbnail made and everything, and it just never got around to making the video. So with that said, I hope in this video I was able to give you some useful information. And if that is the case, I would appreciate if you like, share, and subscribe to my channel. Okay, it's a slow grind up. I still got a long way to go to hit 100,000 subscribers, but if you guys could help me out, I'd really, really appreciate it. If you'd like to join my Discord community, well, we have links down below. It's discord.gg/trading decoded. All one word, all lowercase. I'll bring you right in. And when you do so, it starts your free week automatically. You do not have to do anything else. You don't have to put in any credit card information. You don't have to put any payment, anything, and just show up. Your trial will start immediately. And at the end of that 1 week, 7 days, 7 calendar days, if you decide you want to stay and enjoy the perks that come with becoming a member, consider becoming a paying member. Those links are in the Discord as well. Also, buy my book. Forgot to mention that at the beginning of the video. I'm sorry. It's right here. It's good stuff in there. Charting sessions and, everything we cover in these videos is also covered in that book. Do so at your own pace. And that's why I wrote it. And that's pretty much it. So I hope you all had a fantastic day. Hopefully tomorrow brings some higher volatility and better paying moves and such. And that's it. So enjoy the rest of your day. Till tomorrow. I love you guys. See you.